Alright guys, welcome back to the channel. In today's video we will talk about support and resistance, and for the bonus I will also talk about this volume profile here. Okay, this is the volume itself, and then I will use one more tool that is called Fibonacci tool. It's a Fibonacci retracement tool where we can use this in a combination of support and resistance plus volume so that we can maximize our gain in trading and plus investing. So what is support and resistance? You can see here, the market always moves in waves, like a staircase. This is when the market is heading up higher, we call it bull market. When the market is heading up lower, we call it bear market. So there are different traders in the crypto, or you can call it commodities or stock. So the traders like Wyckoff, Gann or Fibonacci, they have created their own tools and they trade according to those tools. It doesn't mean that Fibonacci doesn't use Gann method or Gann doesn't use a Wyckoff method. Or there is another trader called Elliott. So he used Elliott waves. There were 5 impulsive moves up, and there were 3 waves which are corrective waves towards the downside. So the market moves in a wave or a staircase. So you can see that there is a bull market from the top here, and it comes here. Let's say this is a resistance, and then comes back, retests around this 50%. Gann used to say that, Gann is a trader, he used to say that the market always comes back and tests 50% level first, and if there is a strength, it just rebounds from there towards the higher prices. But if there is no strength, then it can go down to lower levels, and then it can find the strength, come back up, retest that 50% zone one more time, and then it goes higher. Okay, but Fibonacci made his own tool. This is a Fibonacci tool, you can say, and he has 50% zone, he has 38.2%, this is 23.6%, which means almost more than 75% the market come back and retest, and then it can move up higher. And Elliott has his own method. Like we could have in a bull market, we could have a 5-wave impulse to the upside. These are internal structures. And then bear market, you can have an ABC correction as a bear market, and he has certain levels as well. He used to use the fib extension tool where he can find the waves, how much they can retrace. So this is for another video. And plus, if you want to have Elliott wave beginner lessons, you can definitely get into the playlist. I have already made 2 videos which is for beginners, and you can learn definitely those Elliott wave sessions. So now this becomes the bull market, this becomes the bear market, and again we head up higher. So this keeps going on. Talking about support and resistance, this part here becomes your resistance, and this part here becomes your support. It's a simple rule. And when the market moves up higher here, it always comes back and tests this place and then moves up higher. So when this market tests this area here, okay, this automatically becomes your support. That is called support resistance flip. Because initially this was in red here, because this was a resistance for this market here, and when the market came back and tested at this zone, this was your support. We will make it in gray here, okay? And when the market moves up higher here and comes back and tests this place, this automatically becomes your support. This is the new support now, and the price can move up higher. So that is the analogy of support and resistance, and we will look into this analogy in the real Bitcoin chart using the price action. So we will get into this zone over here. So first, let's use the market structure to understand what we are in right now. So you can say this is the last, or this is the beginning of the Bitcoin chart. This might not be, we might have another price action here a little bit, but it doesn't matter. So we have this bull market here, we have a bear market, bull market, bear market, bull, bear, bull, and we are in the bear market. Okay, might be ended or might have slight lower prices here, and then we are heading up higher again. Okay, how much higher, this is yet to be determined. We will not get into that. Today's video is about support and resistance. So you can see clearly this part here became your resistance, right? So we will make it in red, and you can see on the down part here, this part becomes your support. So let's make it gray, support. So you can see very clearly that we have resistance and support, but the market was strong, and this is each bull market and bear market. So we will not have that retracement coming back and testing this place. Okay, But as we will develop in the price action, we will understand that the market definitely will get bigger. As the market gets bigger, it always comes back and tests that support and resistance area. So you can see this is that new support right now. Okay, this is your new resistance. And now you can clearly see that here the price once broke out from this zone towards the higher price. We came back and test this place here. And this now becomes your, this place becomes your support. So this one can change into support, the new support. And your new resistance is over here. Okay, this is your new resistance. Let's change to resistance. So what the market is doing right now, you can see very clearly that we are already testing that resistance. This was the previous resistance for the market, but market has already broken through and now coming back and testing this zone. This is very strong area of support. Market can bounce here. No need to have lower prices. But it's up to market to decide whether this support is enough or we want to get slightly more lower. You can see this is also another resistance here which became support. We will get into lower time frame and draw these support resistance on, let's do it here in this. Okay, this was first of all the bull market here. Okay, from here to here. We do not have previous price action. So we will continue from here. This was the first resistance what you have. So we will use a resistance here. We will draw it until here like this. And we will call it as resistance. Let's zoom in. So I will have to adjust this resistance here. Let's do it one more time. So you can see here, this is that top. And you can see that there's a large wick here. So we will keep this resistance over here. So this becomes the resistance. Why? You can zoom in here a little bit and understand. There was a push in the price, but it's met with large selling. You can see the next candle was red and it was a large move towards the downside. In this green candle, there was a large volume as well. And but you can see the half of the candle is having the body and then the wick. It means all this was selling. The price did not want to go higher and there were large orders of selling. So the market has to move towards the lower prices. And if you want to understand more about candles and how they should behave, then you can write a comment down below, and probably maybe in my next session I will make the video on candles. But candles itself can be faking out. For example, this could be a move where it shows like there's a lot of selling, but then the price can move up higher. Okay. However, this is a weekly candle, so in weekly there is not much noise. The fake outs on the candles doesn't happen in weekly. Usually it happens maybe in daily or the lower time frame, for example 4-hour or 1-hour time frame. So today's topic about support and resistance, we will talk about that first. So this becomes your resistance because the price has hit higher. This is the top and the price moved down. This is the strong selling. And if you can use the tool of measuring this percentage move down, you can see there is a selling of 53%. And the total selling to the downside here was around 66%. So this is a very large selling order. We will get into this part here. This part now, the next candle itself becomes your support from here to here, because I'm using only the wicks here. Okay, this is the large block where you can call it as a support. You can see the price, what the price action did here, that we had a selling, initial selling, and then after that we went up higher. We came back and tested this region here, and then we moved down, which means there is a lot of selling. The price does not want to go up higher, but instead it wants to go lower. So what we did is we broke this support and we went down and created this part. Now becomes your support. Okay, we will have to change this one at this zone now. Okay, this becomes your new support. And then we have bounce towards the higher price. Again, we met up with larger selling. The price cannot go up higher. There was a candle here and you can see that wick here. And then we move towards the lower prices. But also what you want to notice here is the volume. You can see this large candles here. Okay, this was a large move on Bitcoin, and you can see these green candles, multiple green candles with the largest buying volume where the price pushed towards the higher prices. And you can see this two candles here, these green candles. What do you see with the volume? There is not much volume here in these two candles. Compared to this one, this is nothing. Okay, but still the price moved up higher. That means this was just a forced push to get more fills of the short orders, which means the people wanted to sell here. And this was just a initial buying where it met with larger selling, and then we plummet towards the downside. You can see when the price is going down here, the volume is increasing. Okay, this was a lower volume here with this 2 green candle, and these are higher volume compared to this one. These two are higher, so it means there was a lot of selling here. Nonetheless, we have moved slightly higher here again, and then we are like bouncing on this block here, like taking support, bouncing a little bit. And again, this bounce is without any volume. You can see this is a very good indicator. If there is a volume like this with this bounce, it means the price is going to go higher, but the volume is dead almost. So lower volume, price action moving up higher is a bearish divergence. Bearish divergence going to lead your price towards the lower prices. Okay, so very essential indicator here, the volume indicator. This is one of the favorite tool which I use when I do TA on crypto or stock or any altcoin. I always use the volume profile, the volume indicator, to analyze if the price has strength to move up higher or it has to go even more lower. So what happens here? We have moved up higher, then we broke this support once again. We tried to break it, no, we got a bounce. We tried to break it again, we got successful in breaking this time. So what happens here? The price churns a little bit and gets higher, tests this area, but look at this part here. It tests but closes below the area of support. So now what this becomes your resistance. So we will have to change this part now as a new resistance. We are moving on to this part here because we have broken here. This is your new support over here, and we will change that color to support. And then you can see it's very easy to understand. We get the support, we got bounce, we got rejected, we came back, test again, but we were not holding the support. This went down here. So this becomes your new support now. Okay, and this becomes your resistance. Let's change that as well. So we will do this one as a support, change it to support, and this part here becomes your resistance. So now you can see what's happening. We have a lots of resistance on top of us. There's only one slab of support below us. So what does the price do here? Price is chopping around. You can see this is look like that old video game, which you can also have this video game in the computers. I think it was in 2000 or 2002. I hope my audience is almost like 30 to 45 years old, so you can understand what I'm saying. There was a slab or you can say a board on below, and the ball used to jump around, and it always, you have to adjust that board where the ball comes back and test or touch the board again and then bumps up higher. So it's a similar analogy you can use on this price action here, that the price comes down, hits the board and bumps up higher. And you can get a resistance here where you can, again, the price comes down, gets into the board, bumps up higher. So in the price action here, you can see that where there is a chop, where the price is churning towards the sideways, it's a kind of a consolidation, and finally it tests at this zone and then it moves up higher. At the same time, what another indicator you have to use to understand if the price has strength, that is the volume indicator. You can see here the volume is rising. And what happens here? While we are having that consolidation, while you are playing that game, up, down, there is no volume at all. The volume is dead. And we can have this volume higher here where the price is moving up higher, where it's breaking this resistance and hitting up the next resistance and coming back and testing this once again. And now what happens? This part here, this part becomes your support because the price moves up higher, comes back, tests this part, and then wants to move up higher. The same thing which I explained earlier, that when the bull market goes up higher, it comes back, tests the part around that 50% or 0.382, 0.236, and then it moves up higher. Okay, this is the same thing. From here, the price goes up, comes back and tests this level, moves up higher. So what we will do now, we will use that fib retracement tool and to understand, okay, this was your top, okay, and this was your bottom. So what do you see here? The price came back and tested that 0.382 zone. This is that 0.382 zone. Gann used to say 0.5, that is 50% level. It can, if you find the strength there, then you can move up higher. But if you do not find the strength there and the price moves down, that means you have to look into next level. If this doesn't hold, you have to look into next level. So that's what Fibonacci's levels mean. So talking about support and resistance, when we came down here, we touched this resistance zone because we have broken first this resistance and then we came back and retested. This now becomes your support. So you have to change this part now as your new support. So now that we have changed this strong support, now we have two support below us, two support above us. So what does the price do? You can see here, the price is trying to break towards the higher prices. Once we got this support, the price never came back to retest. Okay, price never came back near even this support. Because we have got enough support here, the price is trying to break it. It's same like drilling a wall. The more you drill, you will get through. So this is the same analogy here. So once we drill into this resistance, we got through. We came back, try to keep this as a support. We take a retest here and the price move higher. So now what happens? This part here becomes your support. So now we have strong support zone for this price action. These three are already very strong supports where the price doesn't have to come back again to test it. And you can see the price always moves with the steps, like a ladder, you can say, or like a staircase. The price is moving and every time it's checking the resistance and then coming back, again checking the resistance, coming back and then piercing through it. So once we get the support here, we are moving up higher. Why the price is exactly rejecting here? Because we have a resistance zone here. So this becomes your resistance. Once it is rejected, this becomes your support. So let's use this part now as your support. So once we have the support, the price does not come back and test it again. The price moves up higher and comes back and tests this part. Tries to break down, but closes above. That means the strength is there with the buyers. So eventually this becomes your support, the new support here. And now the price doesn't have any resistance. Look what it does. It goes parabolic. Can you see this move up higher here? Okay, this is parabolic. First, it begins with a lot of tests. There is a lot of staircase effect here, okay? And then once it breaks here, it goes parabolic. Okay, definitely comes back and test it, but it never comes back down here, right? It always goes up higher and green candles are becoming more and more and red are diminishing. And then you can see the large selling. Here, do you see green candles more? No, the greens are less, reds are more, reds are more, red is more. So this becomes your bear market now. So we will analyze into this one also. So now you have this strong support down here. The price never comes back and tests it. And as the price goes up higher, these parts here become your support. Okay, let's draw this one part here. So we can understand where the price action has to move and come back eventually to take that place as a support and move up higher. Can you see this part here? Can you see this part here? You can see very clearly then when we had a bull market here, we were testing this price action here and then we move up higher. When the bear market started, the price came down to test this support here, okay, and move up higher. Came back again, wanted to break down, but this was your COVID drop, by the way. And if there was no COVID drop, if there was no pandemic, then this could be moving sideways and getting the strength to move up higher. So the same analogy. This part is your resistance, new resistance here. Okay, I'm using the wrong tool. Let's delete this one. This one. Okay, this part here becomes your new resistance. Let's change it to resistance. And you can see in a larger swing. Okay, price came down. Okay, this is your new support. Again, you can do the same as your homework. Use the chart. Draw all this support and resistance level, and you can see this becomes your support, this becomes your resistance. Price is chopping around, and finally breaks down. Because we are in the bear market, the probable move is going to be towards the downside until we find that support where we can get the bounce. And once we turn into bull market, we are not going to break down from that support, which was initially taken as a support to move the price up higher. And this part, you can see even this is your resistance here. Let's draw a resistance over here so it's easy to understand. You see the price came up here, came back and retested. when we came up higher, we again tested this zone, okay, got rejected, but the price was strong, we went up higher, got a little bit of rejection here, and this might look a little bit, but I think this is a larger correction, maybe even more than 10%. Let's check this correction percentage. So this was the top. Let's use the magnet so we can get the exact rejection here, okay? Okay, you see, this is even more than 10%. This is 16.79%. This is almost 17% of rejection. So if for a trader, 16 to 17% rejection into 10x leverage, that is almost like 160, 170% of gains. So if you put like $100,000 in that trading, because you are sure that you're going to get a rejection here, because this is your rejection level, because this is your resistance. And once the price broke up higher, definitely this becomes your support. So this is a eventual level where you can take a short order, and 17% of a move in a 10x leverage, $100,000 can change plus into $170,000 as a plus, which becomes your portfolio around $270,000. So for trading, for traders, this is going to be an amazing level to short. And even this one, for example, here, once we rejected at this zone, this move here is also a larger one. Let's check this move. So from this top to this bottom here, you see, this is already 21%. 21% of a move is a big move for a trader. Okay, for an investor, definitely you can buy at this support level, and you can sell at the resistance, and then you can come back and buy at the support level once again, and then you sell at the resistance. It's difficult to understand in the bull market where is the resistance, but you can understand from the initial market structure change, and for that you have to get into lower time frame, like 1 hourly time frame or 15 minutes time frame, and then you can understand the market structure change. So the market structure change happens in the lower time frame first. What is the market structure change? First of all, okay, the market structure change happens this way. You have a bull market, you have a bear market, bull market, bear market, bull market, bear market. Yeah. So when you have, these are higher highs and these are higher lows. Okay. If you don't understand what is higher high and what is higher low, then I will let you know in a simple explanation that if you do not see this price action here, and if you see only this part from here to here, this is a high. This is a maximum level of a high, right? And if you see this low over here, this is slightly higher than this one. This was the initial place where the price moved. So this becomes your higher low, because this is a low which is higher than this, becomes higher low. And when the price moves up higher, this becomes higher high, because we have established one high here, and then this high becomes higher than this one, so this becomes higher high. So the market structure says here, this is higher highs, and these are higher lows. So eventually this becomes your higher low here at this point. And then the market moves up higher, but makes a lower high and moves down, makes a lower low, makes a lower high, lower low, lower high, lower low. And then market structure change again, higher high, higher low, higher high, higher low, higher high, higher low, high. So this is called bull and bear market. So if you want to just use one swing, I mean, there are multiple swings here, right? So you can use only one swing. This is high, higher low, high, higher low, you know, this is a higher high. So if we use this structure in the price action, then it's also very simple, the same thing from here or even from here, high, higher low. And then the next one is high, higher low, high, higher low, and the next high. And the market structure changes here. Okay, we will have to get into lower time frame to understand how the market structure change. I already explained just now that in the higher time frame, this is your market structure change, where we break this low here, because this was the initial low, this was the first low, second low, and once we break this low here, or even break this low here, the market structure change to the bear market. Simple analysis. So the meaning of this is within that total bull market, like you can say from here to here, this is a full swing, and then we have a bear market, because 3 years of bull market, 1 year of bear market, 3 years of bull market, 1 year of bear market, you know, this is the swing here. So we have smaller swings within them. And this is where Elliott wave analysis comes in handy, where Elliott used to say that the market moves in waves, that is 1, 2, 3, 4, 5. And then it comes back in 3 waves, which is 1, 2, 3, or you can call it ABC. And then it takes up again higher. So this is the same thing like the market structure change. You can see higher highs and higher lows. So that's the end of session. You can use this analysis now. Oh, I forgot to use Fibonacci tool. Okay, I will quickly use that Fibonacci tool for you guys. But you can use this analysis now, and you can practice on the rest of the chart here. I have already done until here, right? So you can use this part as a resistance, this part is a support, resistance, support, resistance, support. This is what you can do on the rest of the chart, and you can understand how the resistance and support works. So now what we will do is we will use this Fibonacci level here, because this is the bonus tool which I said I will offer to you on this lesson, and we can understand how the market moves with the Fibonacci level as well. So first is your support and resistance. The second part to look at, or the tool to use, is the volume level here. Okay, and if you guys do not understand about the volume, write me in the comment. I will make another session on the volume as well. And the third one is the Fibonacci level, so which we are going to use for now. So this is that tool. You can see this is that tool here. Okay, this is in my favorite, one of the favorite tools. So we will use from this top here to this bottom. Okay, let me move the chart a little bit so you can understand. So can you see, from, let's use the swing directly from this bottom to this top as a bull market, and then we have a bear market. So what happened here, according to Gann, we used to bounce from 0.5%. If the market bounce here at 0.5%, yes, probably if we can maximize a little bit of bounce here. Let's get into a little bit deeper here. Okay, because this is your bull market, bear market thing. Yeah, so this is your 0.5%. Do we have a bounce? No, we have broken down. Okay, first was around that 0.5% test. Okay, broken down a little bit here, and then we bounced, and then we broken down once again. We broke down from the 0.382 level as well. But what I'm saying, that price is bouncing over this, that means the price is showing weakness because it's not going higher. You can see first it went to 0.786, then went down, came up again, did not even pass 0.618, went down again, come up. So this is the thing. So what you can see here, that we are finally testing between the 0.1 and 0.236 level. And this is where it was a big retrace around this $150, and then we bounce. So remember this level here, 0.236 to 0.1. So this is your first bull market and bear market retrace. Okay, we will delete this tool from this, and remember this part here, because 0.236 to 0.1. okay, if the market is strong, it can bounce from 0.5, it can bounce from 0.382. It depends on the market structure change. So we will use the same tool once again and use it for the next bull market top. This was that next bull market top, and the lower high, sorry, the higher low, which is the bear market bottom. So that comes around here. What happened here? Also, if you can see that we have come down. Okay, tested initially 0.618, 0.382, chopped around, we came back down again between that 0.236 to 0.1. But the first bull market, if you saw this retrace here, it happened somewhere around here. Okay, when the market was so weak, it came down very deep, almost came down to touch that 0.1, but okay, of course did not touch it, almost came up to here and then went up higher. But you can see here, this time it's right in the middle. Okay, it means the market is becoming stronger. The market did not go down as much as it went down here. So you can see still the level is between 0.236 to 0.1. We will delete this as well, and we will use the same tool for the next bull market. So what happens here? This is your top and this is your bottom. Now let's see what's happening. You can see again, first bottom was around this zone. Okay, the second one around the mid zone, and now the market has moved up higher. The bottoming area moved up higher. So you can see market is slowly getting stronger. So the same tool we can use again for the new bull market, which is the current bull market, and where the price could retrace. That 236 was eventually getting stronger. So this is that bottom, and where are we right now? We are at that 0.382 level. We haven't even touched that 0.236. So if, let's say, market on the first bear market, it touched very deep, and then it was 50%, then it was slightly higher. So we can assume that market could come and touch, at least even touch this 0.236 level, right? So this is that level where to look out for. And also you can see that there is this cluster over here, the price action. definitely this is your support here and this is your resistance, right? So from this resistance, this place become your new support. So this is how you can use it. So now what you have to look out for is this part is your support. Probably market would come down and test this zone, and this was your resistance. Okay, and let's use that resistance, which market definitely did it here. You can see came back, did not touch it, but yes, there was a support. It went up higher. When it flipped here, this becomes not resistance, this becomes your support. So we will change this part here to support, like that. And now the market is in between. Let's say this was your new resistance at that time when the price was testing around this zone, and then when it flipped this area as support. Okay, so I'm not going to change this as red. This was still support until the price was going up higher, but when it broke down, this became resistance. Okay, the price wanted to break up again, but never happened. It went down. So okay, this one you can turn it now as a resistance here. Let's turn it as resistance, and this becomes your new support here, because from here to here, because that was the place where we get the bounce. So we have two major support below us. Sorry, three major support below us. Actually, there are multiple supports, like this is also support now, right? And this is also support now. But we do not have to draw all this support, because, you know, every time you can see that this is also support now, this is also support. This was the previous bull market top, which is also around coming around the same area. And you see this is also coming around the same area. So I'm not expecting the price to go much deeper here. If it goes deeper, then probably it will touch this support or even this support and bounce. So since I have done this all support and resistance and Fibonacci levels here, I think you can use some other altcoin chart, for example, Ethereum maybe, or even S&P. You can try this by yourself and practice it. So the more you practice, the more it is useful for you, for your trading and investing journey. I'm going to wrap up this video because it's becoming too long. And I hope you understand about the Fibonacci levels and how to read the volume and support and resistance. I hope you enjoyed. I hope you liked this video, and I helped you out with this understanding of support and resistance. And if you do like this content, like and subscribe. And I will see you in the next content, probably next educational content or daily update. I also have a daily update on the Bitcoin or altcoins, or I'm also going to do some S&P or NASDAQ stock market update as well. So if you want to be up to date on the stock market or the commodities or the crypto, subscribe to the channel, and I will see you in the next content. Until then, bye-bye.